Active Trader Live, brought to you by TD Direct Investing. This is your educational one-stop shop for in-depth market analysis, investment insights, help boost your trading potential. Coming up, following 3 chaotic trading days, global markets are in the green for the moment. Want to check my screens. That's after shedding trillions in value as investors grapple with sweeping tariffs that are not only disrupting trade, but are spiking inflation fears. Plus, Wall Street heavyweights, including JP Morgan CEO Jamie Dimon, speaking out about the economic repercussions of these tariffs. And can Delta navigate fuel price spikes, tariff threats, and slowing demand to soar higher? Or will these headwinds ground its growth? We're going to examine the bull and bear cases on this week's Trading Debating. The debaters are standing by. That is all ahead. You're watching TD Active Trader Live. Let's check in on the markets. As I said, I am checking my screens minute by minute. This has been a volatile couple of days. Volatility is to the upside today, so if you're long the market, you're going to take it. Right now, the S&P 500 is up handsomely. Bay Street and Wall Street both showing some gains, a bit of a relief rally. How long do we get to hang on to it? That is anybody's guess, but it's an interesting move. Let's check it on the heat map. I want to see what is actually powering this reversal. Not surprisingly, tech, that did so much of the heavy lifting through the record runs of the markets before we sort of got into this rough patch for the last month and a half or so. You got Apple, Microsoft, Nvidia, Broadcom, all firmly to the upside. Also some healthcare names going to dig into these a little bit later in the show. By later, I mean like 30 seconds from now, but they're actually making a gain too. And the financials. So yeah, a lot of green on the screen after some pretty significant selling days. Let's jump into a few names. Why don't you check out Levi Strauss? It's about flat right now. You're like, why did you pick a flat stock to show me? And the pre-market was actually up about 11%. The company came out with its earnings. It also stood by its full year outlook. So that's pretty good in this environment, right? However, Levi actually noted that full year outlook that they're standing by, it excludes any impact from tariffs. I was a little puzzled as to why the stock was so high based off of that, but now it's starting to come back down. So maybe investors are starting to think, don't you need to think about tariffs a bit in this environment? At any rate, the quarter behind them was pretty strong. They grew their earnings per share, a big pop of 52% higher versus the year ago period. And they also saw a nice little bump up, a little more modest on the revenue side. Let's get back to those health insurers. Healthcare stocks jumping south of the border. This is based on a Wall Street Journal report. The Trump administration is going to increase payment rates for Medicare insurers to 5.06%. Why am I giving you the exact number? Well, that's compared to a 2.23% increase that was proposed under the former administration, so significantly higher. Has a lot of these names, including United Health, jumping higher too. It was there a second ago. You saw it, right? I'm pretty sure. And that's your market update. All right, joining us now for a more technical take on what is happening out there, and I've been waiting for this one considering the market action we have seen. Here in the mean, Jason Natick from our direct investing educational team. This has been a very interesting period. Always great to have you guys here. I need some technical analysis. What are you bringing here?
Yeah, let's dive right into it, Greg. Coming into the week, there's obviously big headlines that came out on Sunday. Some of the more fun ones that I like were economic vandalism, economic Armageddon, engineering a recession, and stagflation purgatory. All right, so that's kind of the theme that was shaping up to what the week was. A little bit. So I wanted to look into the SPX. That's what we want to start with, the broad U.S. market, see what's shaking out. Of course, I mean, at this point, pretty much all the major indexes have been trampled on where their support levels were. Pulling up the chart right now, what you can see is we were previously coming in from last week. That Thursday, Friday move that we saw was these two significantly large candles that we saw just broke through that support level. What was the support previously, sitting in that 5,400 range, just fell through the floor and hit the almost 5,000 range is what we're having it. This is also the year for records. for good and bad. All right, so good, bad, and ugly. We've seen the Dow close more than 3% down, and if it did end up closing, in fact, down 3% yesterday, it would have been the 3 consecutive close of 3% or greater, and that's only been done once in history so far, since 1896, and that was during the Depression. So I'm glad we didn't break a record on that one. We just avoided that one. But coming back to the SPX, just on the sort of valuation standpoint, what we're seeing over here is SPX's PE ratio, if you look at it historically, we're currently sitting at about 18.6%, and if you look at any time it's dropped more than 17.5%, which is currently sitting at just about where it is right now in the candle. The historical ratios, anytime there's been 10 occurrences of 17.5% drops or more, and the PE ratio has gone as high as 16x, which was back in 1998, and that was a 19.3% drop, and it's gone as low as 8x, and that was back in 1982 during stagflation. So there's a bit of recurring theme about stagflation that words being thrown around. So we're at 18.6. We could set a record for still reversing and holding as the next highest PE ratio. That's what will remain to see. What I'm looking for then now is a lot of headlines came out yesterday talking about these big Wall Street firms revising their targets on the SPX. Most of those targets are sitting in that 5950 by Oppenheimer. BofA, Bank of America put it down to 5600. And then Goldman Sachs said, we could see a 25% drop down from its peak. I've just got it measured right on my charts here. That would put the SPX roughly at 4600. Currently, we're about the 5200 mark. So there's about a 700 point potential drop if we do get into a recession here, potentially, based on what's being called out. So that's one to keep an eye on. RSI just ticked above again, back into this sort of bullish signal over here. So be keeping out of this momentum building here. What I would want to look for is the candle pushing above that previous bear candle that we had from Thursday. If we can push past that one again, we might head up back to that 5400 level, looking at it. All right, so that's a little bit about the SPX. What we got next is the Bitcoin. We're going to go into crypto and check into what.
Crypto hasn't been spared this either.
No, crypto hasn't. So, it's been weathering sort of the hurricane pretty well up until last week. It was trading pretty much flat, and then obviously over the futures into Sunday, it just it turned tail overnight and just plunged with the rest of the market that we saw. It is now trading below the 200-day moving average, of course, which sits at close to about that 78,000 mark right now. That's kind of where it might find support back off of that. So right now we're just shy of the 80,000 mark is where it's sitting at. It's fallen 30% of its January highs based on right now. In terms of total dollar value, we saw Bitcoin, $464 million in liquidation that took place over that fall from yesterday there. So this is one to keep an eye out on. The moving average convergence divergence, or a MACD signal, is just did a bullish crossover, but I'm not going to see a momentum really building up until it can go back into positive territory with the momentum. Right now, there's a significant support level across a longer period, which is sitting in that 72 to 74,000, and that's where we saw this last candle on Friday wicking right off of that. It went down to those lows, touched it, kissed it, and back up again. So that's what we'll keep an eye on. And then, of course, our last one we've got to talk about, which kind of falls into place nicely with kind of our conversation that we're going to steer today, and that's light sweet crude oil. So a bit of updates happening on crude oil. Of course, we've seen a big plunge in price. I'm sure it's great for us at the pumps, if you're having a bit of relief with the summer just around the corner, and with the consumer sentiment sort of wavering, it might mean more road trips are going to be happening for a lot of vacationers. And so crude's hit a low of 58. We're sitting at that 61 level. A lot of this was attributed to the fact that the OPEC just announced that they're going to pull forward their planned production increase and return back to about 411,000 barrels per day.
Interesting timing on that, eh?
Yeah.
Interesting timing considering what's going on with the global economy.
Exactly. So the timing of that may be questionable. Oversupply concerns, what that's going to mean. It also means on the economic backdrop that we also have crude, just lesser demand just means the price is going to be depressed. Some are calling for targets. You can see on this falling wedge pattern that we've got, we're seeing maybe even getting down to that 50 level, possibly heading into the summer if it continues to shake out. You
said the summer driving season, people going on vacation. Thought maybe because they're not going to fly, but wait a minute. Let's not jump the gun into the debate.
I don't want to make that connection.
Throw anything
don't
in.
Don't make that connection.
Favor one side or the other. We're supposed to be neutral here. You're looking at Chevron, Jason.
Yeah, so here it teed me up nicely here to kind of keep that focus on kind of the oil and gas kind of companies here. I was doing some research, I always do, and one of the headlines that jumped out to me that I wanted to dig in more was there was a big, court order for Chevron to actually pay $740 million due to a spill on the southeast coast of Louisiana. This was back from 2013, so a long time to work itself through, but still, it's not just a drop in the bucket. So big thing. And also another headline that caught my eyes: Chevron's actually trimming its workforce in a cost-cutting measure. We have over 1,300 jobs that are expected to be laid off in 2 of their bigger locations throughout the rest of the year. But I might be bearing the lead here. That as you talked about, oil is certainly come down big time in price. Part of that is due to weakening demands from a tariff landscape, domestically in the U.S. But then the surprise, from the Saudi-led OPEC, we had some huge output spikes in terms of oil production. But if we move ourselves to the chart, we can see the CVX shares have taken quite the hit. Now they've been kind of, it's been a pretty standard pattern, kind of moving up, moving down in a range over the course of time. But if we take a look at more of the near-term trading, that it bounced off of the top end of resistance and actually retreated very quickly down towards that 140 level. So it's a pretty drastic drop over a really short period of time. So it's a big-time bearish signal, losing almost about 16.5% on that. So time will tell if we can, if we're going to hold that level. But if we can see it drop down below 140, we're going to be giving back into prices we haven't seen since 2022. So really looking to keep an eye on where CVX is going to go in the near term.
Interesting stuff, gentlemen. Thanks for all that. If you at home have a question for our team, here's how you can get in touch with us. Just email td.activetraderlive@td.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand of your side of your screen. It's going to take you to our TD Active Trader Live website. You're going to find more information about all our trading platforms under the Get Started tab, so you can find the one that is best suited for you. Whether you're a new or seasoned investor, TD Direct Investing has you covered and has once again for the 3rd year in a row been ranked as the #1 online brokerage in Canada by the Globe and Mail. Time now for trading, debating, the highlight of the program this week. The stock in the spotlight is Delta Airlines. Before we get going, gentlemen, just want to remind our audience that the securities and the strategies discussed on our show are for educational purposes only, should not be considered investment advice or buy, sell, or hold recommendations. Options trading carries high risk, may not suit all investors. Significant losses are possible, so it is important to assess your own risk tolerance. Make sure you do your own due diligence before engaging in trading. Okay, let's get back to that stock of the hour, Delta Airlines. What made you guys pick this stock to debate? I'll start with you, Jason.
Yeah, one of the things that stands out to me is Delta sells himself as kind of like a premium airline, so really interested to see how the market is going to react long-term with those premium features, or if they're going to need to kind of willing to continue to pay more to get the same thing to bring their balance sheet back in line. So, look, interesting discussion there.
Yeah. One of the world's largest airlines, of course. They've got their earnings coming off on Wednesday morning, so we'll take a look at that. And it's
timely.
One of the few.
It's a timely
one.
Yeah.
It's one of the few carriers that also passes around the snack and bevy cart with some top tier offerings. So that's like a unicorn these days when you're flying.
Okay.
So that got me interested.
We've laid the groundwork. Let's get some time on the clock. You each get the 2.5 minutes to make your case. Give you some time to counter. You draw from the hat as always. And Jason, you're the bearer this week, so why don't you kick things off first?
I'm the bearer.
I'm going to keep you honest with the bell.
Okay, the bell's getting me early here. I see it.
I already rang you out. You need to keep it right.
Tough crowd here.
That's all you have to say.
All right, let's get short to the point. Delta Airlines, or airlines actually in general, are not recession-proof, okay? I saw a headline just recently, yesterday, when I was doing a little research. UBS is removing buy ratings on a swath of airlines, and Delta was not out of their gaze. They're actually firmly in the crosshairs because they actually lowered their price target by 45% down to $42 a share. So that's a pretty significant move out of UBS. And then, if we're talking about debating here, don't take my word on it. Let's talk about the word coming right from Delta itself, who has slashed guidance coming up in the first quarter by more than a half in many of the fundamental metrics. It's a huge decline from there. Actually, this is what they're saying: a recent decline in consumer and corporate confidence amid growing uncertainty over the economy is weakening our domestic demand. They're talking about cutting growth from 7 to 9% down to 3 to 4%, and then we talk about earnings per share from 70 cents to $1 down to more pedestrian 30 to 50 cents. cents. And this is with concerns that the economy is shrinking. While tariffs don't necessarily impact the air travel directly, it's not a stretch to say that people won't be jumping at a chance to pay premium prices, even for those premium snack card function or abilities that you're so fond of. And lastly here, before we get to the charts, is to say that corporate travel, it's a big part of all airline business, and that tends to be a bit of a lagging indicator. Expense budgets don't last when there's economic uncertainty, and corporate travel is historically one of the last returning things to come back into the kind of expense budgets. So we'll be looking to see what that looks like and how that shrinking forecast impacts them. But jumping to the chart, a few things that kind of jumped out to me. When I first went noticing here that we had a big cross when we're talking off the highs that the stock had earlier in the year. We had both the price as well as the death cross of all three moving averages cross down below. That kind of coincided of the pattern that kind of formed for me. We've got a double top that formed kind of late through November when the market saw broader rallies, but the stock was not able to hold on to those gains. We saw it try to breach new highs, but then selling pressure is beginning to pick up. And we saw a measured move of about 8.5%. The stock has flown right through that particular price level. It blew right back by that 8.5%, but there was a flag pattern that I happened to notice on this. So just kind of coinciding with that, the market paused, it caught its breath and tried to rally, but we've seen continued losses really to happen to 19% on the bottom side.
All right. Here, and he laid it out. What
He definitely laid it out.
He laid it out.
All right. So of course I'm on Team Bull, and I'm going to start by saying this. Look, Delta's leadership in the airline industry remains solid. They are one of the most profitable U.S. carriers, and I would even say even extending that globally. They're able to weather these short-term challenges. I think they'll emerge stronger. They have a healthy balance sheet to do that. I'm going to first start by talking some of the key performance indicators that you have in the airlines industry, and start with that. They're a premium airline, as you mentioned, Jay. They have the highest revenue and cost per seat mile in North American market. There's two metrics I'm going to look at. It's called total revenue per available seat mile, and then cost per available seat mile as two metrics. So they have the highest total revenue sitting at 21.37 cents. And if you look at the nearest competitor, domestic competitor, that would be United Airlines at 18.34 cents. So that really shows just how much revenue they're able to generate per seat. But the costing as well, which comes in at 13.54 cents, and versus United, which is at 12.58 cents. But if you look at the spread between them, Delta's making about an 8.5 cent spread, versus United, on their numbers, they're making about like 5.5. So there's just significant sort of upside available there. So from a caustic standpoint, they're very strong. When you look at their, one of the biggest revenue generators for them is miles. A lot of these airlines generate their revenue because they sell miles to credit card companies or partnerships who they have with, in this case, Amex. And they were able to generate $7.4 billion from Amex last year from miles sold. The target by Ed Bastian, CEO, says we want to get up to $10 billion by at least the next year. So hopefully we see that coming through there. And they're also expanding their networks on key revenue segments, and that is Latin America, 13 new routes added over there across its 6 hubs, and then the European expansion, which is big across Italy, Dublin, and Barcelona. Now, going into the chart, I know... I
feel like you didn't want to look at this chart. You got 30 seconds
What do I have to say with the chart? Okay, here's what I'm going to say with the chart. We are at a key support level at 37. We saw a bounce happen. Yes, it came through it's had a long downtrend that it's trying to break off of, but it's pushed through with 2 significant candles, the Dragonfly Doji and Inverted Hammer. These are both bullish reversal candles, and we're seeing a push up. We're seeing it push up over here. So I'm going to say this is a swing trade coming off of these swing lows. This support has held for, going back years. If you see it, we've seen bounces coming off of it at many different junctures. So coming off of this trade there and heading into what might be, if we have an evolving situation around the tariffs, a possible push up to a next level.
The bell jammed.
Oh,
no. We're going to have to oil that thing. All right. Have we been maintaining this properly?
Grease it up a little bit.
We've heard the bear, we've heard the bull. You got 3 minutes to counter. Go for it.
All right, let's start off with some macro numbers in terms of travel. And we international
You're going
travel.
there, Jay.
I'm going to go there. International travel is forecasted to decrease by 5%. And this is not just a Delta problem, this is an airline problem, which is going to remove $64 billion from the airline and tourism businesses. And then that's not even if we kind of zoom in on tighter time frames, 24% is down over the last 6 weeks in terms of international travel. So this has seen huge numbers of vacancies on international flights, which is causing international flights to show deep discounts in terms of their prices, which you're banking a lot of your discussion on. And the concerns amongst many analysts in the industry are thinking that your domestic travel is going to feel the brunt of that, with pricing increases to offset those international woes that the companies might be feeling.
Here's what I'll say with that. With all of this news, the market's always forward-looking. It's already priced in. They've already punished the stock to account for this lower demand that's going to be coming into the summer. But one thing I'll also cast everyone's mind to, COVID happened in 2021. And there was big bailouts that happened around that time. 2020.
We blocked
in the heat of 20. Shut their mind. But Delta had an amazing balance sheet at that point, and they still maintain a strong balance sheet even to this day. When you look at their debt profile, when you look at their margins and everything, they're going to be able to weather this storm, even if it's going to last, let's say, through a season. They did it through a year. A season doesn't seem that much. When we look at their numbers, I just want to look at the fundamentals. When you look at operating margin, they stand at 9.73. They're above United again, 7.3. I'm not even going to go to the other competitors because it's not worth mentioning. Net profit stands at 5.61. For an airline industry, that's strong. When you look at the lowest, when you look at American Airlines and United, they're like sitting in the mid double digits, mid 2.5 range to about like 4% on United Airlines. So when you look from that standpoint, and then I'll talk about the debt profile for just a second over here, because that is one that we really need to lean into. So they have been very meaningfully trying to reduce their debt profile. They've been brought it down from close to 19 billion to 16 billion now, 19.5% reduction on that side. So they are really concentrating on reducing that debt in this interest rate environment.
They've got some big ticket items there. They're coming their way. If we think about Delta's fleet, it's the third oldest by median age in the aircraft space. And with a full, let me make sure I have my number right here, with a full 46% of their fleet being over 20 years old. So they've got some huge outlays of costs coming up. We're talking, wide body airplanes from Airbus. This is just Airbuses. We've got over $20 billion of debt coming onto their books because of new purchases over the coming years. So that's going to be something that's going to be impacting them. And also nice to say that Delta happens to have a really great safety record. So I don't want to be piling on that record, but they've had a number of very high-profile incidences.
We'll blame that on our weather, okay?
We'll blame it on our weather, but if you're a consumer that's got choice in the market, are you going to pick the airline that's been plastered all over the news, making headlines?
Well, look, when you talk about those aging fleet, you look at the ROA, it's still a very healthy number of what they're doing with the assets. All right, got stuck again.
Technical difficulties. All right. We've had the counter, we've had the bear, we've had the bull. Now is the chance to actually talk about how you could potentially play this all through options trades.
Yeah.
Jay, you kicked things off for us, so why don't you jump in there?
Yeah, let's do that. So when I'm thinking about kind of the market that we're in right now, even if you're feeling bearish about a particular trade that you want to play, there's so much to be taken in that it's even outside influences are going to be impacting your trade. So it's nice to have an opportunity either to lower your cost or remove or define some of your risks. So that's really influenced some of the trade that I was going to make today. I initially was thinking about an opportunity would be just to buy a put. It would probably be the most bearish opportunity for me to take. And if the trends continue, we've seen many recent gap downs as I've got in my chart. There's four gap downs the stock has shown over the last 2 weeks period of time. And they've not regained any of that. So we can buy some puts on the side of that when we could continue to make money on the downward pressure. But if we go to the option chain, I've already got the trade kind of drawn up. This was around buying something a little bit long term. I want to give myself time to be right, and when we're buying options, we do want to make sure we account for some of the decay that's going to happen. But we've found an opportunity here. If we can go ahead and buy a $31 put, and I've got this trade actually backed around here. We're buying a $36 put out to June, and then if we go ahead and sell a put to bring in a little bit extra premium, let me flip those around so I can get the right credits for the audience there. So we've got if we can buy this at a debit, this $5 widespread at a debit of around $1.50, meaning I'm still leaving $3.50 of meat on the bone for myself if we do get that expected move and continue downward pressure over the next 2 and a bit months.
Okay, and the risk here?
Risk is here when we're thinking about debits, it's going to be around what you're putting in. So in this particular case, I've got $3.50 of upside. I'm risking my debit that I'm paying going in, so about that $1.50, so $150 a contract.
All right. How would you play it on the bull side potentially?
Yeah, so I'm going to bring up the charts again over here, Greg. So what I've got looking at, I've got the Fibonacci's pulled up here, and we've seen on the Fibonacci levels, I mean, it's broken through every sort of level here. It is swinging off of the possible last level that we have and maybe pushing back up to the 44, 45 range is where we could see the next test happen. So based on that, taking a bullish view and given the way the current market is evolving with the volatility in nature, what you're going to see naturally across the board with options is they're going to be expensive, especially if you're a net buyer of options. In this case, which I am, because one of the trades you could consider doing, being bullish, is a bull call spread trade. So coming to the bull call spread, what I've eyed here on the option chain, looking for the expiry, the July expiry cycle, which is roughly about 100 days there. Reason I want to go out that far is I want to minimize any sort of time decay, as Jay mentioned, going long on a trade. But the other thing I also want to keep in mind is because it's expensive right now, rather than just going on a straight call, I want to wing it what I mean by that is I'm going to sell another call further out of it. So the strikes I'm looking at are a 40 strike to go long on for July and selling the 50 strike out there. Now, right now, that would be with the uptick today a little bit, working in my favor, of course. It's trading for a premium of $3.10, so that is my overall cost or outlay on this trade, and I'm hoping for the price to push up. Max gain would be if we can get the price to push up by July to get to the 50 level. We'll be making roughly about $7 there in profit. And worst case scenario?
Yeah, if Jay's right, what's the worst case scenario?
If Jay's right on the happenstance, then if it falls or stays below 40, then we're going to be losing the $3.10 that we put in there.
Interesting stuff indeed. Thanks for laying out the bear and the bull cases for Delta Airlines. Just a reminder to our viewers, the debate was for educational purposes, does not reflect our personal opinions about the stock. Now, before we move on, Jason, you're going to show us how we can use alert tools on the platform.
Yeah, absolutely. So we already laid it out in kind of our technical take and when we're talking about the markets and our trades, but things can be very, very volatile, right? There's no free lunch in the market. So the alert tool I thought was something that we could really bring forward so we could help keep us informed of what's going on. Major price levels are happening on indices or stocks are breaking through support or resistance. You have an opportunity not to kind of always be forced to be connected to your computer. You've got alerts right in the platform that can keep you informed of those major price levels and events that are happening. So let's jump into the platform. I'll show you really 3 quick ways that we can add in the alerts and where you're able to monitor those as well. All right, so first and foremost, I've just got a quick workspace up here in front of me, a watch list on the left, charts on the right. Delta happens to be in this watch list. If I wanted to set an alert from my watch list, all I'm doing is if I go ahead and right-click on any of the data points here, I happen to right-click on the bid. If you look down on the pop-out menu that came out, there's a create alert option that pops up for us. We've got that ability here in the platform to set alerts on market news, such as when the stock, if it trades below a particular level, as my bear case laid out, you'll be able to be alerted to when that particular point happens. You can also get alerted to calendar events, so like earnings events and other things like that, as well as major news going forward. So that's how we can do it on the watch list. Let me quickly show you how you can do it on the chart as well. I happen to have the E-minis, so this is the S&P futures on the chart on the right-hand side. You can use it for any particular instrument, much like we did on the watch list. If we just go ahead and right-click on the chart, you've got your create alert. So quick and easy like that, you can set those levels. Maybe you're looking to do some risk management. If the indice or the stock falls to this particular level, that's going to be a point where I know I'm going to want to jump back in and make sure that I've got all hands on the wheel, and that's a good opportunity. And lastly, I'm going to bring you back to the trading tab. I can show you it's really going to be in a bit of the same song and dance, but how you can create an alert for a particular option if you're looking to manage an option, either to take yourself out from a gain or a risk perspective. It doesn't matter where we do it, bid or ask. I'm right-clicking again. There's that same feature that's popping up, creating alert, okay? And lastly, the alerts are going to be housed, the alert book. You'll be able to see them on the chart. If you add them, you can have that visual, but also under the Market Watch tab, there is our alert book is going to be at the top. Where are we at? Thank you, Aaron. There we are, missing the tab altogether.
Teamwork.
Okay, teamwork. If you have any alerts, that's where they're going to show. Easy to manage, easy to roll over, and easy to keep everything top of mind.
You guys may vigorously debate, but in the end, they're teammates.
Teammates,
exactly.
Well done, Sarah.
Thanks for that, guys. If there's a stock you want to see our debaters go head-to-head on, send your suggestions at td.activetraderlive at TD.com. And for more information about the Active Trader platform, scan that QR code on the bottom right-hand side of your screen. It's going to take you to our TD Active Trader Live website. And if you scroll down, you're going to find a tab that says Join a Live Masterclass. This Wednesday, 2 p.m., the team's hosting an interactive session about TD Active Trader. It's going to focus on the essential tools that you need to research and identify trading opportunities. Registration is required, and it's open now. The TD Ultimate Investor Contest is officially live. Canadians can enter today for a chance to win a black iPhone 16 with 128 gigabytes of storage, a check for $500, a book kit featuring 5 educational books on investing, and a 1-hour private Q&A educational session with a TD Direct Investing Education Manager. To enter, visit the TD Direct Investing Facebook page, follow TD Direct Investing, and like the TD Direct Investing contest post dated March 24, 2025. You can also gain a second entry by following TD Direct Investing on Instagram and liking the TD Direct Investing contest post dated March 24, 2025 there as well. There's a limit of 1 entry per entrant per social platform. The contest runs until April 22nd, 2025. Scan the QR code for full contest rules and details. All right, before we wrap up for another week, lots going on. There's lots more to come this week. We're still firmly in the green. Bay and Wall Street right now. We got a bit of a relief rally. Of course, anything can change. What are we watching?
Yeah, so Greg, I think apart from this week, the big tariff news, obviously that's the back and forth that's been happening. There's obviously rumors yesterday we knew about where there's apparently going to be a 90-day pause, was unmerited. But what we're also going to hear is what are the other countries coming to the negotiating table and pulling them out? Is there going to be more retaliation? We haven't heard a lot from Europe yet, so I'm keeping my eyes and ears glued to see if anything comes out of there. So a bit of volatility will kick in. But on the macro front, we've also got CPI and PPI. Coming out on Thursday and Friday, respectively.
That used to matter to us a lot, didn't it?
That used to matter.
It still does.
It's been overshadowed a little bit right now.
Inflation.
It does. So that's going to add to the mix when those numbers come in. Expectation right now on both core CPI and PPI is going to be 0.3%. So we'll see what shakes out of Thursday morning there. But the other one I'm looking at is we're starting earnings season again, starting with some of the big asset managers and financial companies. Yeah. And the one I'm looking at is BLK, BlackRock. BlackRock happens to be the world's largest public asset manager. They have $11.6 trillion assets under management as of the end of 2024 there. They're also renowned for iShares ETFs. Most investors might be familiar with that. But they're coming in onto Friday earnings here. What the expectation is $5.3 billion in revenue, EPS of $10.58. But what's going to be interesting is this business is very revenue dependent on the market itself. And, I think we were talking, Larry Fink came out and said, he's been chatting with a bunch of Larry Fink, of course, the CEO of BlackRock, a bunch of different CEOs, stating the fact that many think that we're in a recession or going towards that. So it'll be interesting to see what they come out and say as the largest asset manager, what they're looking in terms of investment themes, but also what that's going to mean for their business overall. We've seen them also break down this long 5-year trend, just breaking below. It's snuck back in there, so that's a key level to keep monitoring off of. There is further demand zone below another going down to this area, which is in that 680 to 720 zone. Right now, based on what the earnings is, we don't see it coming there. They could push back up, but if the earnings is not coming hard or the guidance is fairly weak, we could see it push below that level and shoot down there. The other big news with them is that they're also going to be buying 2 ports in Panama. Hong Kong-based CK Hutchinson is selling those, so that deal is about to be finalized, and this was Trump's whole thing when he came into office to say, or the administration's to say, hey, we want to take back a bit of Panama Canal. I don't know if I think it's going to be the whole thing, but at least they'll have 2 ports under BlackRock-led consortium.
Interesting things there. How about you, Jason?
Yeah, I'm going to go down the financial road as well, right? They usually kick off earnings. There's so many other big names to pick. I'm going to look at JP Morgan, but Wells Fargo, Bank of New York on Friday as well. And then on Monday, we've got Goldman and Bank of America and Morgan Stanley on Tuesday. So lots of headlines going to be coming fast and furious, I'm sure. One of the CPI numbers coming out on Thursday will be interesting to see how those inflation data happens, because there's still lots of concerns that the Fed is going to start cutting interest rates. There's projected as many as three rate cuts, which could have significant impacts on the U.S. banks, because if the interest revenues aren't going to be there, we can certainly see some margins compression from that. But then also if there's broader recessionary fears, which many are saying we're already there. the economic slowdown impacts the banking sector quite heavily. But we're thinking about like loan growth, credit costs, write-downs. There's potential for growth there. But if we take a look at JP Morgan, I've got on the screen, not only is Jamie Dimon in the headlines around, calling for some sanity in the markets around the tariff relief and things like that. He's one of the more high-profile members of kind of Wall Street insiders making comments there. But the stock itself, we can see that it's kind of coming off its highs. But we've happened to see this, much like we saw in Delta, the death cross along with the price cross very recently to the downside. And the last thing to kind of help confirm the right-hand kind of shoulder of a Head and Shoulders. I'll bring that up on the screen as well. So leading into earnings, we've got a couple significant bearish patterns that we'll see that there is some potential for downside move if the market's not happy with what they hear, or if we just get broader sell-offs if they continue.
A lot is happening. A lot lies ahead. You guys always do such a great job of breaking it down for us. A pleasure. We'll see you again next Tuesday.
Thank you as always, Greg.
All right, that's our show for this week. As always, investors should perform their own due diligence before trading. Thanks for watching.